Okay, so coming on now, a guy who probably needs no introduction, but I'll bring him on anyway. John Ramsey, portfolio manager over at Measure 8 Venture Partners. What's going on, man?
Hey, Patrick. Good to be here. Thanks a lot.
Good. Yeah, well, it's good to have you here. It's exciting. Now, listen, not everybody is out in the open. Some people live under rocks and in caves and stuff. They may not know what Measure 8 is. Can you tell them just briefly why you're here, what Measure 8 is? Yeah, just tell them.
Yeah, absolutely. And interesting here that I need no introduction. Maybe you know something that I don't, but
yeah, exactly.
Just a brief background on Measure 8. So Measure 8's a cannabis-focused asset manager. We have a venture capital arm as well as a hedge fund arm. We keep the two vehicles separated. We have a full team around both sides. I predominantly work on the hedge fund side, and the firm was started in January of 2018. It was founded by Boris Jordan, who's the chairman of Curaleaf, which I'm sure you've had on before. And
I think I've heard that name before.
Yeah, Boris really started Measure 8 as a venture capital firm focused on making minority investments in other cannabis companies outside the purview of what was Curaleaf at the time. It was called Paleotech. I joined in the spring of 2019, launching the cannabis-focused hedge fund in August of 2019 with my partner, Justin Orr, who's our CEO now. And the hedge fund is a traditional long-short vehicle, but we deploy what we call a full spectrum of trading and investing strategies around the cannabis sector, which I'm sure we're going to go into.
Yeah. So, John, I'm going to give you an opportunity to walk us through whatever you have prepared for today. Happy to come back and do some Q&A with you. But the strategies I think are super important, especially for the folks in the chat today. And I'm sure we'll breed some questions. So,
absolutely. All right. Thank you, Patrick. Yeah. So today, this is mainly meant to be an educational around trading strategies for those of you that are trafficking in the cannabis sector, mainly in the public markets. One thing I'll say is before I start is that anything that I say is not meant to be investment advice or recommendations. Anything I say is mainly just my opinions. To start with a brief background on myself, I joined Measure 8 from a firm called F&Y Capital, which is a principal trading firm. It's ran like a multi-strategy hedge fund, but rather than investing outside capital, they're investing partnership capital. And I was running a systematic macro strategy for them, so a rules-based system mainly focused on liquid currencies, G10FX, so liquid currency markets, liquid futures and commodities markets, interest rates markets. So very far from cannabis. I started to look at cannabis in 2017 as I was kind of looking at more esoteric commodity markets. I kind of thought that it was cool that there was this supply-demand imbalance in the Canadian medical market, which was eventually going to flip to an adult use market, and also realized there wasn't many institutional eyes focused on the sector. So kind of saw as an opportunity to specialize in something and get to know the sector from the ground floor. Eventually started running a dedicated cannabis portfolio for F&Y and had the fortune of getting to know all the leading management teams and companies in the sector in 2017 and 2018 and participating in a lot of the go public rounds for some of the leading U.S. operators today. I come from a trading background. I've always been extremely passionate about trading. I know that day trading and trading the markets is in vogue right now ever since the coronavirus lockdowns. But I'm proud to say that I was very similar coming up. When I was in college, I was the guy skipping classes to trade on a trading setup that I downloaded and installed in my business school's Bloomberg lab. So I was always extremely passionate about trading, got into trading and started to learn various strategies and kind of different dynamics in place of the market, which I think is helpful today to put into context into the cannabis market. For those of you on the retail side, trading and investing in the cannabis sector, I think it's very helpful to understand kind of how institutions are thinking about the space and what they're focused on, and getting to kind of know the different strategies that they are implementing in the markets. But before getting into into the details of some of the strategies, obviously anyone that's been focused on the cannabis sector knows that it's an extremely volatile period. I can't begin to count the amount of 40% off the highs moves that I've seen in the sector. Just understanding that volatility and kind of where it's stemming from, I think is really helpful to, taking a step back and staying invested for the long run. I think everyone that's probably listening right now believes in the cannabis industry as a whole, believes that it's going to be a huge sector. It's already a really big sector. It's only growing. Regulations are moving the right direction, but how do you stay invested in the game around that volatility? There's moments of time where the sector is experiencing what I like to call capitulatory moves. Capitulation in stocks themselves based on trading flows from a lot of times larger institutions that are on the wrong side of that volatility. So how it's seen on my end and in my world is that risk managers and risk teams are tapping portfolio managers, investors on the shoulder and telling them they need to get out of their positions. They need to take risks down. And a lot of times when that's happening, it's happening at the worst times, at times where you do not want to get out, and it's on fringe lows. So that's kind of what drives a capitulatory move. It's a little bit more art than science as identifying it. But typically in the cannabis sector, when stocks, especially on the U.S. plant touching side, can move up and down 5% on no news on any given day. And that's just something that you have to be used to and aware of. Now, when the stock is down, let's say 10% or 10% plus on very outsized volume, on no fresh news, that could be a sign of capitulation. I'd say every different capitulatory move feels different. You know it when you're in one, and you know it, I guess, in retrospect for sure. But overall, just in terms of a strategy of being able to stay invested in the sector, you really need to be able and willing to buy on those capitulation moves to lower your average cost, stay in the game, and be in a position of strength when the next upswing happens, which, we've seen a lot of up and down moves like that in the cannabis sector. I think just looking back since I started following the space, I think the Horizons ETF is only up about 12.5% net. And so there's just been a huge amount of volatility around that. Obviously, there's been massive moves up and down in the securities. So there's a lot of different ways to take advantage of that. Buying into one of those capitulatory moves is one way, and it's obviously easier said than done. So I think that going into kind of the next point is just what drives those kinds of moves, what drives longer term price swings and multi-month moves in the cannabis sector. I like to think of it as just kind of understanding where the themes lie in the cannabis sector at any given moment. What are investors really focused on? Over time, the main themes that have persisted have been regulatory change, so states or countries turning on medical programs, eventually flipping to adult use programs, are kind of two of the main ones, but also margins, profitability, and M&A strategy, as well as capital raising, have all been very persistent themes. And kind of as a use case, I like to go back to what I like to think of as the big bang moment in the cannabis sector, which to me is Constellation Brands' first investment into Canopy, which I believe was around October 2017. So around that time, all the Canadian licensed producers that many know today listed on the NASDAQ and New York Stock Exchange were, I think, only listed on the TSX, or some of them even listed on the CSE. They're only servicing the medical market in Canada. There weren't many banks following the space from an analyst perspective. And Constellation coming in really did two things. It put a big stamp of approval on the industry as a whole, the cannabis industry, as being something to look out for and be mindful of as being a real sector. But also put a stamp of approval on the Canadian landscape and kind of eyeballs on the big catalyst of that medical program eventually flipping to a recreational adult use program. Cannabis wasn't legalized for adult use at the time in Canada, and kind of just looking at the supply picture, I think collectively the licensed producers probably were going to be capable of growing around 300 to 400,000 kilos, let's call it, of cannabis. in Canada collectively, and analysts were pegging the market at around a million kilos of demand, which in retrospect was probably too high. I think it still hasn't reached that level of demand yet. But it's very analogous to kind of where we are right now in the U.S. sector. I know everyone kind of on the line is very optimistic about the U.S. sector, and everyone's got their eyes on federal legality here. And I like to kind of think of us in this wait and see moment, hold your breath moment of waiting to see what that regulatory landscape is going to look like. We're all kind of waiting on Chuck Schumer and a host of other bills, Safe Banking Act, as kind of guideposts to show us what the market's going to look like in the future. Back then in Canada, it was very similar. We didn't really know. We had estimates out of what the market size is going to look like. Full regulations weren't out yet either. And that investment by Constellation drove a multi-month rally in the sector. Institutions that may have not had done their work yet went to the largest cap stocks first. So your top 4 or 5 by market cap stocks were leading the rally on the way up. And I think that's something similar that you could see on a U.S. legalization event. Institutions turning to the largest U.S. cannabis companies. And typically the largest market cap companies tend to be the leaders in the sector and usually are the most well capitalized. So from a balance sheet safety perspective, those you could feel a little bit safer in. But towards the end, later stages of that rally, which I think lasted up until January of 2018. So in December 2017 and January 2018, you start to see lower market cap, more speculative names in Canada start to appreciate, in a month going up 200%, 100%. So really starting to pop. It's very similar to what you saw in January, February this year with some of the more speculative names on the CSC that are plant touching in the U.S. Start to go on really big moves upwards and starting to surpass some of the larger caps by percentage moves. So I think from a trading perspective, it's important to be aware that those kinds of securities, while may not be the most fundamentally sound and make the most sense fundamentally, those stocks can move extremely higher, and being in a position to be able to play that is important if that's your goal. And I will pause and just say that, there's a lot of different strategies and a lot of different goals for, let's say, an investor or a retail investor. So I think it's important to just understand your long-term goal. If you want to just be invested in the cannabis sector or invested in equity markets as a whole, and you're willing to assume that volatility, that's perfectly fine. There's ways to do that. And so it's important to, have the discipline to stay invested and not try to trade around your positions if that's your goal. If your goal on the flip side of that is to make money every single day, day trade the sector, go home flat, and don't take any overnight risks. You have to be willing to assume those risks that come along with that strategy and have the discipline to do that and not turn a day trade into a longer term trade, and stick to your plans and stick to your guns, stick to your strategy. So there's a lot of different ways to make money in this sector. Just understanding your goals, I think is important. So, but going back to the analogy I was trying to make is this: the theme of the undersupplied market in Canada back in 2017 started to play out. Companies were raising money on the back of that strength and raising money on what was coined at the time funded capacity. So companies were raising money, promising that they're going to take their square footage from X to 3X or 5X. Analysts were then taking those numbers and spitting out sales estimates, based on pricing and a whole host of other assumptions that in hindsight, didn't exactly hold up. But at the time, it was only fueling the speculative rally, and a lot of that funding went into the theme starting to shift from now the market being undersupplied to, wow, in a year out, 2 years out, this market's may be extremely oversupplied if those demand projections don't come to fruition, which eventually ended up happening. So being aware of kind of the underlying themes that are happening and then the change and the evolution of those themes, I think is extremely important in understanding massive inflection points in price action in the sector. So in that instance, in January and February of 2018, the licensed producers then had what, if it wasn't a 40% move off the highs, I mean, some of the stocks were probably down even more than that off the highs. It was a pretty massive move down, period of heightened volatility that in retrospect ended up being a good time to add if those are your securities you're focused on at the time. And then, fast forward to the fall of that year is when Tilray went public, and many of you know went to 300 after it went public and was a whole new speculative run up. But I think that those kinds of cycles that you see as themes are changing and the narratives are shifting have happened in the U.S. as well. On the U.S. side of things, back in 2018, a lot of the leading U.S. multi-state operators were private companies rolling up minority interests, doing pre-public funding rounds at pretty low multiples, and then flipping and going public on the markets at much higher multiples. So there was a lot of stock that was raised previously at much lower valuations. People were up a lot on their investments that year, and so I think a lot of the multiples of those raises were kind of priced for perfection. So just being aware of of some of those multiples appreciation in such a short period of time is important. Just understanding how those funding rounds ended up faring, and a lot of them went under pretty fast. There was a pretty limited pool of capital at the time that's only expanded ever since. But today we're still talking about a limited pool of capital in the U.S. That's been a major theme. So there's a whole host of catalysts around expanding that pool of investable capital. In the CBD and hemp space, there's been a pretty similar boom bust cycle and theme of around projection of what the CBD market is going to look like around the spring of 2019, and how large the hemp market is going to be. And there was a whole host of capital raises and a lot of funding going into production as well in the hemp market. And then as a lot of you know, the FDA is kind of dragging their feet on guidance on what on clear guidance on the CBD market, led to a big boom bust cycle in that market as well. So while the cannabis sector doesn't always exactly repeat itself to the T, it definitely does rhyme around the different themes. And I think understanding how those themes are transitioning and evolving is going to help kind of identify those capitulatory moments and inflection points in the cycles to profit off of. So kind of going into a little bit more of the strategies themselves. At Measure 8, as I was mentioning, we like to think of how we invest and trade in the sector as a full spectrum approach. So we're using all the tools under our tool belt from a trading perspective and investing perspective to take advantage of every different profit generating opportunity there is in cannabis. Underlying the core strategy of the fund is a fundamental long short strategy, where our long holdings are companies that we're meeting with management teams and doing fundamental work around the earnings powers of those companies themselves and kind of the business strategies and competitive advantages. Just to kind of hone in on a theme right now that's played out and kind of how to think about some of the winners on the long side is that last year what we saw was companies that were rewarded and did the best, in my opinion, were companies that had the foresight to invest capital in the most impactful markets and turn on production assets at the exact right time where those states were ramping up either from a patient perspective or flipping from medical to adult use. And turning on that cultivation in a supply constraint market, it was extremely impactful to revenues and earnings, and that flowed through into beating consensus estimates and company guidance. And it's extremely important to understand kind of company guidance as well as the sell side consensus, because that's really what's driving, I guess, your quarterly performance off of company to company. Based on where those stocks are priced today and what they're priced in terms of consensus quarterly estimates. So companies that invest in Illinois, Pennsylvania, and turned on those assets in the back half of the year, we're beating estimates hand over fist just based on how those markets were performing and their market share that they're capturing in those markets. I think going forward, the two markets to look out for are New Jersey, New York, companies that are investing heavily in those markets, and then watching out for potential medical markets like Pennsylvania and Florida to flip to adult use is going to be really big as well. So on the long side, we focusing on companies that are doing well geographically in regions that are impactful, but also management teams that are astute to take advantage of and see that kind of opportunity in state by state. And on the short side, I will say that shorting in the cannabis sector is definitely not for the faint of heart. The stocks in the sector can be way more irrational if you're only shorting on fundamentals. We like to think of our shorts as having a clear catalyst or some kind of out for that stock to underperform in the near term to justify taking that risk of being short that stock. But shorting in the cannabis sector, you have the benefit of realizing the variance in performance across the sector. There are so many winners and losers over time. If you look back on just general variance in the performance of the stocks, there's companies that have gone into receivership, have gone on the brink of going under, while their brother and their neighbor have blossomed and have turned into multi-billion-dollar companies. So there's a lot of opportunity from an alpha generating perspective to reap those kinds of long short rewards from having that kind of strategy in your portfolio. But it's not for the faint of heart, and I wouldn't recommend it for a passive investor or passive retail trader. Other strategies that are important to focus on that we employ: risk arbitrage strategies. Consolidation is a big theme right now in the cannabis sector. It has been a big theme, and I think it's only going to continue. Being aware of where risk arbitrage spreads and deals are trading, I think, is important for retail to understand, and any investor. During the last kind of retail speculative run up in the cannabis sector, which I believe was in around February, when Tilray was I think up a huge amount just in that month alone, the beginning of that month. The company Tilray and Aphria were obviously going through a merger that just recently closed, and just tracking that merger arb spread, that spread went out at a certain time in February, was at a 400% annualized gross return if you had set the spread. So you had to be short Tilray and long Aphria at a certain ratio. There's plenty of resources online if you're not familiar with risk arbitrage trading and how to set a spread in that sense. There's plenty of resources online to understand that how that works. But at a 400% annualized return, the market was pricing in, and it was extremely irrational to price in. The deal break. I mean, it was pretty much pricing in that the deal was going to break right then and there. And eventually that deal closed. So it was a hugely asymmetric risk reward, skewed to the risk reward opportunity, setting that spread. There's been a lot of other risk arb spreads, nothing as wild as that, but there's been others that you kind of have to assess for yourself the probability of that deal closing. Another thing to focus on: short-term and catalyst trading, event trading, earnings being one of the major events in the sector. I think it's important to understand that the stock market as a whole is a forecasting mechanism. The cannabis market, while not being as efficient as the overall stock market, does do a decent job of pricing in earnings. So trading on earnings is not just predicting if the company is going to beat or miss on the earnings. It's kind of also just understanding the dynamics of where the bar is set in terms of consensus expectations, and how are stocks pricing in those expectations. So, example, more recently in the Canadian sector, there was pretty low expectations coming into these last quarterly reports, And you start to see that with the price action of the stock starting to a lot of the stocks start to sell off into the earnings reports before the earnings reports, starting to price in a little bit of a miss across the board in the Canadian sector. And that provides an opportunity from a counter trading perspective on a miss of the prints, kind of like a sell the news, buy the rumor, sell the news kind of situation where people were selling the rumor of the cannabis of the Canadian sector missing, buying on the and then on the flip side, buying or covering on the actual prints that missed. And you saw you saw more recently, Kronos was the first one that traded up after the earnings, and the sector has had a pretty big move up afterwards, which I think is driven by more than just earnings. But other events around the sector, looking at the options markets and how volatility is priced around events. A good example of that was presidential elections more so recently, where cannabis was obviously a sector that was going to benefit from a blue wave. So ahead of the U.S. presidential elections, other sectors like the EV sector, cannabis, other sectors that were going to benefit from a blue wave, volatility was priced up going into that event. Now, cannabis wasn't priced up too much more so than any of the other sectors. And just knowing what we know about where Canadian licensed producers, which are used as proxies of U.S. legalization event, could trade on an event like that. Typically, like 20 to 30% is not out of the question of how high they could have traded up. So just taking a look at that upside and where the options market was pricing in, they were probably paying you about, I think back at the time was around 4-1 to take on that bet that they're going to be up 20, 30% after a blue wave. The betting markets and polling was saying that blue wave is going to be around 50-50 odds. So you have a positive expectancy on that trade. So those are short-term trades and catalyst trades to take advantage of. Having a positive expectancy is important. So defining your upside, defining your downside. You have to make some assumptions on what your upside would be and what your downside would be in different various events. And then putting a probability on those two events happening, you can calculate your expectancy. I think that's really important for a retail investor to focus on, just kind of being a little bit more formulaic in your approach and your strategy and what you're buying and selling. Capital raises, while many retail may not have access to participating in capital raises, just being aware of capital raises and the pace of capital raises, I think is extremely important. I think every single upside inflection point, high in the market, has been preceded by a huge influx of capital raises in the public markets. So understanding where that stock, how much of that stock is being placed in new public hands at higher valuations, could create an overhang if there is some kind of down move in the sector. It's happened plenty of times in the past. I'm sure it will happen in the future as well. Companies are very opportunistic in terms of raising capital. Cannabis is extremely capital intensive business, so companies are very opportunistic when the sector is hot to raise capital for growth plans and for M&A. So being aware of that as an overhang as well when the sector is hot, it is pretty critical. And then just kind of general tips. I mentioned knowing your strategy. For those of you that are looking at fundamentals and kind of how to get a fundamental edge as well. Reading MD&As, reading financial reports, and reading the transcripts of earnings calls is extremely important. All of you can do this at home. I think reading the transcripts of the earnings calls are much more beneficial than actually just listening, because you learn, you read a lot more and you can read at your own pace. There's a lot of things you may miss. Also looking at the investor presentations, slide decks on all the websites of the companies. There's a lot of information in there. So you kind of can use those tools to your benefit of gaining your own fundamental opinion on stocks, and not just relying on what you hear third hand from sell side or other analysts or research or internet forums. A quick note on technicals. I know that a lot of my colleagues and a lot of other people on the institutional side that I talk to think of technicals as a little bit of funny business. I would say that technicals, while if your approach is a longer term approach, it should not be the end all be all, but I think it is important as a context clue and a good tool into your tool belt to focus on with fundamentals. So what I like to focus on are trend lines. Is a stock in an uptrend still? Has it broken a trend line? And failed highs and failed lows, I think are just general price action, I think are pretty important. I don't rely too heavily on any one or two indicators. Now, some traders have been successful in relying on those indicators, and everything is kind of something that you have to identify as it fits for you and fits under your strategy, then it could work. But over the short term, I think technicals are more important. Over the long term, less important, and fundamentals are more important. Let me see if any of you all have questions on the YouTube chat, and I'll invite Patrick back in the room as well if he has any questions.
I'm here, pal. I'm here. Okay, so there's one question. It was from earlier on, but I don't know how far you want to get into this, but let's go ahead and show it. Okay, so I don't even know how you say that. Birch BJ1 for John. Who does your fund Measure 8 work with?
Yeah, so prime brokerage has been a big topic and a theme more recently in the industry. Obviously, it's extremely hard and it's more cumbersome to prime brokerage cannabis securities. And so as an institution that's invested in the cannabis sector, we have multiple prime brokers. I'm not going to name any specifically, but I'm sure you've heard of them. They're brand name prime brokerages. And one comment I'd like to make in terms of the talk around prime brokerages like CSFB purging in the past, putting a halt on clearing cannabis stocks. From our perspective, that hasn't forced any forced selling in the markets out of those prime brokers where they told you need to get out of your cannabis stocks and sell them this instant. I think that's a little bit of a false rumor that's been inherent in the market. It's definitely stoked some fear in the market that was the instance. So I think that people were selling ahead of that kind of rumor. But in my experience, that hasn't been a forced selling moment.
Got it. Okay, here's another one from Justin. What's your outlook on the Mexican market? And why don't we expand that question past just Mexico into specific international markets that you guys might be looking at?
Sure. Yeah. We definitely are, keeping a close eye on the EU as an international market. Justin, to answer your question on the Mexican market, I've been disappointed that market hasn't come to fruition and hasn't had day one of sales more recently. I think it could be a huge tourist market. I'm hopeful that eventually will happen. It's just, I think that market's going to have to deal with a lot of red tape around differing political opinions and views to get there. There's obviously been a stall in that market more recently, out of the legislature, but I'm still hopeful that that's going to happen. The Latin American market is very primed to finally popping off. There's a ton of investment that's gone there. There's extremely smart management teams that are focused there and operating there. They have the production to get that going. So I'm excited for eventually that to happen. Now in the international markets, the EU markets, I think is going to be a much bigger market overall. More recently, Germany's medical market is obviously the one to watch to eventually flip to adult use. I think that would be a watershed moment for the overall EU, and I think that eventually all the countries will start to follow suit. But
how can they not?
Yeah, we're watching out for that.
Cool. And here's a follow-up from Justin. I don't know if this is something you want to speak to or not, but will there be any companies in the U.S. or Canada playing in the Mexican market?
In the U.S., I don't know. The U.S. operators are so focused on undersupplied U.S. states flipping to adult use and the high ROCs that they're seeing in those states that most of them haven't invested in other international markets. A couple have. But definitely the licensed producers in Canada who have been very focused on the international markets and have now fortified their balance sheets by quite a bit. So I think that they would definitely focus on that. If it turns out to be a real market, I think that a lot of them are exhausted from making bets on markets that have taken a lot too long to turn on. So I think as that market starts to play out, I could see them making investments.
Cool. So final question here for you, but when it comes to the market as it exists right now. Let's take away other catalysts or not take them away entirely, but let's say they're more long term, like legalization and stuff like that. Other than a certain company, which I know you're very close to, what companies are killing it right now? What companies would you be excited about right now in this space?
Yeah, look, so the long term goal on the U.S. side of things, everyone kind of sees it. It's building the Coca-Cola, building the Pepsi of cannabis. But how do you do that right now? I think it's virtually impossible to build a cannabis brand in a market that's the first 3 years of an adult use program. It's just such a supply constrained market that the consumer is going to buy anything that's on the shelves, and preferably something that has the highest THC and the lowest price point, right? So building a national cannabis brand is extremely hard, especially how fragmented the market is. You can't move product across state lines, and you have to set up, a separate business in every single state. But the companies right now that are building out a nationally vertically integrated footprint, which is, to me, is kind of like building out this national distribution channel, and the only way that you can do it right now are the only ones really set up to do so. And so I think over time, taking a step back, the companies that have set up such a broad distribution framework are going to be the ones in the first mover advantage of being able to build those brands and kind of hone down on consumer brand equity in every single state. So to me, that's the most exciting companies that are building brands across different states in a cohesive brand strategy, I think, are the most exciting.
Very cool. John Ramsey, thank you so much, sir. Measure 8 Venture Partners, really cool fund, and I look forward to seeing what you guys do next, man.
Absolutely. Appreciate it.
Take care. You too.